Optimism is rising in the VC market following Trump's election in November 2024, with the promises of lower interest rates and the ongoing AI boom. But beneath all of this optimism, there are risks and fragility. Are we heading toward the burst of the AI bubble? And how will such a burst, along with the ongoing trade wars, will affect the stock market and even companies unrelated to AI? Are we heading into an economical crisis? In today's episode of the Montrepreneur Podcast, I share with Vincent, a venture capitalist who shares his controversial yet cautiously optimistic perspective on all of these topics. I recorded this episode at the beginning of 2025. I really enjoyed my talk with Vincent, and I hope you do as well.
Okay, great. Vincent, I'm very, very, very happy to have you here on my podcast. I really appreciate taking the time. Welcome to the Montrepreneur Podcast.
Well, thank you. Happy to be here.
Thanks a lot. First, Happy New Year. Happy 2025, starting the first days with me. We had 2 weeks ago, a networking event in Barcelona, and a lot of VCs were there. We were talking about what could happen in 2025, and you were cautiously optimistic about what could happen. The majority of VCs are very optimistic about that the next 12 months. So now you are telling me you're a little bit more negative than like usual. So what do you think? I mean, what's your background? What do you think? Why do you think? What do you think could happen in the VC market or change in the next 12 months?
Yeah. So maybe I have to start with a little disclaimer that I am naturally slightly pessimistic nature kind of guy. So I tend to think a lot about potential risks, which I think is a good thing in venture capital. Basically, my initial thoughts when we talked 2 weeks ago was that looking at what's going on, looking at the discussions within the venture capital community, the outlook seemed to be fairly positive, and I was only cautiously optimistic. Because next to the most common narrative within VC, I could see some potential risks and some troubling trends, basically. Having said that, people were saying, okay, we are heading towards a lower interest rate environment. Startup valuations are stabilizing. There are fewer down rounds than a little while ago. VCs have a lot of dry powder. The IPO market and the M&A market seem to be recovering, and are expected to recover in the next 12 months, which means that they will be able to exit investments. Finally, give money back to LPs, which will then help LPs invest funds into new venture capital funds. So the whole scenario there is quite positive, and also the fact that most VCs being positive is itself a positive factor, because when people feel optimistic, they invest in a dynamic environment, and it's a sort of self-fulfilling prophecy. When people think that things look good, things turn out to be better than when people are pessimistic. However, so recently, we've heard already that the Feds are expecting to cut rates less than previously thought, given a lot of economic uncertainty, some of it linked to the Trump administration, and basically nobody knowing, possibly not even Trump knowing, what's going to happen in terms of trade wars and that sort of thing. So that's one first factor, one first concern. And then I'm getting increasingly worried about the stock market and the effect it's going to have on IPOs, particularly, and M&A to some extent.
Why that?
Well, I guess the key word is bubbles. Everybody is aware of the AI bubble. I think there are two AI bubbles, but I think that the stock market, generally speaking, is showing signs of a bubble. You see some parameters like the Buffett Index, so the ratio between total market cap and GDP. That's at an all-time high. It's even way higher than during the dot-com bubble, or should I say just before the dot-com bubble. You see price to earnings ratios being very high as well. And also when people talk about the stock market growth in the recent past, that market growth has been very uneven. You have the Magnificent Seven who have grown significantly, but there are many stocks out there that are not doing well. So I don't think that saying that the stock market is doing great presents an accurate picture of reality. And I fear that if the AI bubble bursts in the coming months, which could happen, and your guess is as good as mine, will happen this year or next year. But I have a feeling, I must say, that it might happen in 2025. That could impact even companies that have nothing to do with AI.
Mm-hmm.
And so if the stock market suffers, then the potential for IPOs will disappear. Exits will remain very difficult. Thankfully, we have a much better secondary market for VC investments these days than a few years ago, but they tend not to be the greatest deals for exit. So I'm concerned.
Okay. I can totally understand like where are you coming from, especially like the AI bubble, because I have the feeling that we went like too much into this direction. But what could happen like if things just broke, or like companies in the AI industry didn't scale the way the investors wanted, for example, like in 1 year?
Well, I think there are several scenarios. First, what could trigger a bubble burst, right? And I think it's important to bear in mind that there are two bubbles, because there are two types of AI companies. There are the AI technology companies, and then all the AI application companies, right? So on the AI technology front, what could trigger a burst? I think the most likely factor would be just one fundraise that goes wrong, because all these companies have been spending an awful lot of money on building up their technology, which means that given the fact that they have virtually no profits or very, very small profits, they have to fundraise again and again, and to keep their past investors happy, their valuation has to increase at every round. And this at some point this has to stop, right? At some point, some investors must evaluate the company and say, well, listen, we just don't see it. You already have a multiple that is way out of whack, so no more. And if one of those companies fails to raise or raises at a lower valuation, there could be contagion. They could be just it could trigger a bubble burst. But there are other factors as well. Like one of them, maybe unlikely, but significant nevertheless, is regulations. As AI becomes more and more powerful and sophisticated, there may be a point at which, even in the US, regulators might say, hey, we really need to put some legal framework around this. And that could also send a negative signal. And then there's also simple competition. You may have heard of DeepSeek in China.
Not really.
It's a new model that apparently competes very well with its Western counterparts, and I think they built it on a budget of I forgot how much, but it was in the tens of millions of dollars, as opposed to the billions and billions of dollars spent by the US. So if Chinese AI should not be underestimated. And I think that if suddenly there's a flood of high quality AI competitors coming from China, logically, rationally, investors should start worrying about the value that is going to be generated by the Western AI companies. So now, bear in mind that, I was talking about the stock market earlier on. When you look at the Magnificent Seven, they all have a very high exposure to AI, whether Microsoft, Meta, Nvidia, all of them. So the effect on the stock market of a bubble burst would be quite dramatic. And then you have the second bubble, which is the AI applications. So there's been tremendous hype around what AI could do to provide better solutions in all of sectors and verticals. And in reality, I think that the use cases are not that compelling. There are, of course.
There are some, yeah.
Yeah, but there's a lot of those companies are basically including a little bit of machine learning to an already existing solution, and the value add is not that great. But investors have been very rational and basically triggered by the word AI, and so a lot of those companies are completely overvalued. And I'm not going to mention any particular company, because some of my friends have invested in those companies, but some of those valuations are just crazy.
Okay, would you say that the application bubbles will burst like before the other bubble, like the main core technology AI bubble, or what would you say?
Sorry, can you?
Would you say like the application AI bubble would burst like before the core AI technology bubble? Because I have the feeling that there's like a lot in the market, like really a lot of agents.
Yeah. They're kind of independent from each other, I think. Now, the other thing to bear in mind is that bubbles can burst in different ways, right? It can be quite dramatic, or it can be sort of
correction,
a soft landing, and I think that given the spread of all these AI applications, this could be the latter scenario. Like gradually, a lot of them just disappear. I mean, we've already seen that with some startups that were basically ChatGPT plus a little user interface, and 6 months later, ChatGPT could do exactly that. You didn't need an interface. And those companies are gradually disappearing. So it may not be that dramatic of a burst. I think that on the AI technology front, that could be much more dramatic simply because of the amount involved.
Sure. Yeah, I totally understand. But if we really, if this scenario happened, what do you think is the next trend, or like the next technology that will take over?
Well, there's a lot of noise right now about quantum computing. So it's a, I think it's a prime candidate. It's a little bit like, the previous, when you think about the previous trends, it was all about big data and analytics, and then people thought, oh yeah, well, it's not really working that well, but now with AI, it's going to work much better. And now we find that AI has limitations, and it's a little bit like, well, quantum computing is going to come to the rescue of AI, and it's always sort of moving the goalpost as we go. So quantum computing, I think, is a likely candidate for the next.
With the next what?
As the next hype.
As the next hype. Okay. What do you think? How far are we from like having this technology really embedded in our, I don't know, like computers, and really accessible like to the mainstream?
In theory, it's years away. In practice, we are constantly surprised by the pace of innovation and technological development. And I'm definitely not an expert in quantum computing, so there could be some sort of halfway technologies out there being marketed sooner than we think.
Mm-hmm. I mean, okay, like, who do you think like is more responsible like for creating the hype? Is like more the investors, or more like I don't know, like people following like one direction?
Well, I think there's a symbiotic relationship between investors and some of the startups, but I think there is a fundamental problem, I think, in venture capital, that venture capital creates hype and thrives on hype. As long as the hype doesn't stop and the bubble doesn't burst before you exit your investment, you're doing great. And I think that it's a sort of built-in feature. Going back to basics, the sort of starting point of venture capital is the power law, right? So you have to accept the fact that a small number of your investments is going to return the majority of your financial returns at the portfolio level. And so the approach, even I would say the recommended approach, is to focus on the home runs and don't worry about your investments that fail. Which means that if you know that a lot of your investments are going to fail, you're going to be disappointed, basically. You might as well start with high expectations, right? To get to an okay result, you start with high expectations, and that's fine. Which means that everyone is chasing unicorns. And you should not. So this is the official VC theory, that you should not invest in any startup that doesn't have the potential to return all of your portfolio and more. So there have to be unicorns, and given that there's tremendous fear of missing out in venture capital, because you have to be part of the next big trends, the next unicorn, and so you end up with a lot of herd movement. People flock to the same type of investment, which, by the way, makes them expensive to start with, and it's a snowballing effect, because you need to build up the hype to make sure that the following rounds are more expensive, are higher valuations, which, by the way, is also promoted by the fact that these days funding goes to the large funds, and the large funds are becoming, I think, unhealthily large, and they have a lot of money to deploy. And to deploy a lot of money, it's much easier to invest continuously in expensive deals rather than investing in the early stage. So that's why we see a lot of late stage deals that are expensive, that are in these hyped up sectors, and too little money at early stage. And so they build up these valuations based on a narrative that creates the hype, and that is based on the hype, which, by the way, is the same problem with the stock market. I mean, when you think about, if you think about Tesla, for example, right? Tesla, which is valued, I think it's valued about 8 times as high as Toyota, and Toyota produces 10 times as many cars. So if you point that out, people will tell you, yeah, but Tesla is not a car company. Tesla is a technology company. And it's kind of the end of the argument, but it's not an argument. Show me the cash flows. Show me, what do I get? What are the cash flows that I have access to when I invest in Tesla? But right now, I think that's the economy is built on a sort of postmodern attitude, which is that all that matters is the narrative. So it's not just VC, but I think that VC especially thrives on this sort of mental framework.
Yeah. When you were like explaining that, I was like reflecting. It's actually particularly the same psychology with anything, like with founders, like running like behind like the same I don't know, like technology or industry or whatever, or the investor like falling for the same pitfalls, like psychological pitfalls, fear of missing out, etc. It's interesting, like to hear that it's also like on the other side, when we on the like side of founders, we think that the investors do everything right, but it's not the case.
No, irrational thinking can be found everywhere, and of course, founders are encouraged to, if you have your own startup and you can claim that you're using AI, that you can throw in as many buzzwords, AI, Web 3.0, blockchain, whatever, right? People are going to get more excited about it, and it makes no sense. And that's why I'm saying I'm probably, well, not sure whether I'm a pessimist, but I easily feel unease when I see this sort of attitude among investors, that basically it just ticks all the boxes, and it's like, well, yeah, but how about we look at things like profitability and proper, which can be explained, I guess. I spent about 20 years as an M&A advisor, which has a much more conservative, much more let's look at the numbers type of process. So VC sometimes seems very shooting from the hip.
I understand. But when I think about that, like tackling like boxes and just etc., what kind of like effects does have like on the society? For example, you're changing markets, you're like creating new like job opportunities, you are deleting or canceling like the old ones, etc. What kind of social aspects of or effects like people how to say notice when things change, for example, like on the market or from a VC hype or something?
Well, the vital aspects of VCs, I think, are often overlooked, and that actually gets me quite worried about the overall sustainability of venture capital as a sector. I think in most people's mind, including VCs, the purpose of a VC is to make money. I disagree with that. I think that, sure, you have to make money because money is the sort of is the fuel that you use to do what you need to do. Because if you don't make money, you're not going to have LP investors in your fund. But I think that the purpose of venture capital is to back innovative startups, provide funding to startups that otherwise would have no other options, to raise capital and take off. And there are many cases where VCs, I think, destroy value at society level. I'm not bad-mouthing. I am, I am part of the crowd, and I love VC, but I think that there are many instances where VCs destroy value at society level, starting with the power law. So 90% of startups fail, so we're told, right? And that's something that I think we can't really fix, because people will always come up with ideas that may seem good, but they're not. But the fact that some VCs choose to back up a startup just because it has a nice story and and they take a punt, and it's not exactly spray and pray, but it's veering a little bit towards we just have to make many small bets. It ends up costing society a lot, because you have startups that go through pre-seed, seed, Series A, sometimes Series B, before finding out that there's no product market fit, right? And that doesn't make any sense. It should have been addressed way earlier. And so I out of curiosity, I calculated actually that more or less startup failures in the US every year costs about $100 billion. I said so to a colleague, VC, recently, and he told me, "Oh, that's not that much money." But on the other hand, think about what you could do for society with $100 billion. Now, I'm not saying there's no way we could make sure that no startup fails.
Sure,
but,
yes.
But saying no early, killing them, like, oh, you have this idea, forget about it, don't do it, right? Instead of spend 3 years of your life trying to build it up and then fail, I think that it would add a lot of value. Then the other thing is, of course, when you actually invest in companies, VCs try to, because they're chasing unicorns, so they try to push them to grow revenue, and that's pretty much it. Sometimes, so this can have 3 negative effects. One is sometimes the startup founders and team just burns out because you're just putting too much pressure on them, which is not good. But also sometimes you drive incumbent companies out of business, which is not a great thing. I'm all in favor of competition. It's
Sorry.
an incumbent company out of business. If you're going to replace it with something that is sustainable and has better product and services. And on the other hand, the third effect is that sometimes you build unicorns that become market leaders and great, but they are not sustainable because you have not paid attention to profitability. And the latest figures, I think among the 2023 vintage unicorns in the US, 90% of them have dropped in value below not just the IPO value, but below the last private market valuation. I think a third of them are not unicorns anymore. So they've dropped below $1 billion. And last time I checked, 50% of them had about 2 years worth of capital runway, and very little, if any profitability, very little profitability. So again, looking at it from the society's perspective, you create a company that drives other companies in the sector out of business, and then they have a certain probability of collapsing completely a few years later. And so what do consumers do?
Yes, I totally understand. I mean, that brings like many questions in my mind, but the first one would be like, do you think there's a better model than VC to invest in companies?
I think that profitability is very important. And this, I know it's controversial, and it's recently there was a little bit more focus on profitability, but I fear that if the situation improves at all in the world of venture capital, people are going to again forget about profitability and still focus on revenue growth. But to me, I think there's an opportunity and there's a need to rethink the model. Do we absolutely need unicorns? I mean, since when investing in a company that exits at $300 million, since when is that bad? Especially if the company doesn't need like 5 rounds of capital raise to get there, right? So if you can find a company that is profitable or is going to be profitable and profitable at the right level so that it can bootstrap afterwards, it's probably not going to become a unicorn, because by bootstrapping you grow more slowly, but at the same time you avoid dilution. So financially, I think it makes sense, but it's probably a less exciting, less macho type of investment strategy than just focusing on the ones
Sure, yeah.
that we seriously.
No, I can totally understand. I'm thinking right now, I mean, I don't know anything about that subject, but I think that blockchain could be like a solution for investing democratically. So like we don't have like one VC or one like let's say company that will decide, okay, we are going to invest in this company. Then rather we will have like a lot of people who will decide like democratically, okay, we think like we should go this direction. Do you think that, I don't know, like if I explain my point like well, but do you think?
You mean some sort of crowdfunding?
Yes, like
Yeah, I guess I wouldn't encourage people. I have I have I wouldn't encourage people to invest in ventures without a portfolio approach. So two things. First, I think that investing in ventures requires a portfolio approach because of the risks and because you need a systematic professional process to assess the opportunities. And I think
yeah, I forgot about that. Yes, true.
I don't see how people would conduct their own due diligence and be able to vote, I would say, for a venture or the other. And I'm always really nervous when I talk to angel investors who say, oh, yeah, well, I've invested in 4 ventures. And it's like, well, the risk you face of losing everything is so high. A portfolio approach gives you a little bit more, well, it reduces your risk. So that's one thing. Second thing is, I don't think it's a question of technology. I think it's a question of mindset. Because, I mean, if people were voting through some sort of blockchain, whatever, and I'm not too sure how it would work, but if they vote because, oh, this is AI-enabled Web 3.0 blockchain solution, whatever, I don't understand at all what they do, but it sounds really nice.
Yes.
Same. Basically, I'm very old school. I think that to make good investments, first you should look for deals that you understand, deals with startups that you understand, deals that show you that cash flows are not something in 20 years time, but there are profits either now or in the very near future. You should look for cheap deals as well. So if when everybody invests in investing in AI, you're just chasing expensive deals. And that kind of going back to what I was saying about this sort of contrarian approach of not looking for unicorns, but looking for more solid startups with profitability, with no need to raise future rounds or just one. You can start by looking at sectors that are completely overlooked because they have no potential for unicorns. And there are very interesting sectors, edtech, silvercare, mental health. Those sectors are unlikely to deliver unicorns, but they can deliver very good companies. And on top of that, also looking at it from the societal perspective, when you think about 1/3 of funding going to AI companies, is that really what the world needs? There are many other things that that society needs, rather than just AI solutions that oh, well, now we can make cool pictures using AI. Great, but how is that helping the men in the street, right?
I mean, there are for sure like many use cases, but I understand like your point. As you said, like at the beginning, there is like so much use cases, but probably not as much as we think that it will solve every problem.
Yeah. And there are I mean, then you can combine. So if you combine, so for example, the use case of AI in edtech is huge, right? But there are, so again, some people will invest in edtech because it's an AI solution for edtech, but there are some non-AI edtech opportunities out there that have a huge positive impact on society that would make very good investments. Very.
Can you give like one or two like examples, like maybe about the sectors or something?
Well, as I said, edtech, silvercare, so people solutions for elderly people. Demographic trends worldwide show that let's say it's a booming sector, which is underserved by venture capital. Mental health. There are many things in related to climate that are not. I mean, people go for the obvious, but there are some small subsectors that are interesting. I would say, just look at all sectors and what society needs, and that's also it links back to a very fundamental principle in both entrepreneurship and venture capital, which is that you need to address a problem for customers, right? And more, I feel that around things like AI, around things like quantum computing, these are technology-driven solutions. They're not addressing a pain point. It's just like, well, now we have AI, we could apply it to this, and
yes, I get what you're talking about. So maybe looking like what are the main pain point is, and identify like what is the need there.
Yeah, I mean, there are many pain points. It's a never-ending quest if you look for pain points in society. So healthcare, of course, down to logistics and retail, and so many to choose from.
Okay, cool.
That's the obvious.
Sure. I would like to zoom out a little bit and go back like to the first point we were talking about, like the scenario of the financial crisis, or the pessimistic scenario. For a normal person, or like for normal people, what could I do to protect myself if things are going bad economically in 2025?
Well, you can. What can you do? You mean to protect yourself from a stock market crash?
For example.
Well, I'm not a financial advisor, so I decline any responsibility. I think obviously, cash in before others is the right way to do it. I definitely do not see cryptocurrency as an alternative. I think that cryptocurrency is not a bubble waiting to burst, and that could be very painful too. It's something that I've always kept away from. There are times where cash is king, and obviously financial crises tend to be such times. But and the thing is, I'm far from being the only one saying that financial crisis is due to happen. I mean, some people were talking about financial crisis coming up last year, right?
Sure, yeah, I heard that as well. Yeah.
And mostly on the basis of the yield curve inverting at the end of the previous year and coming back up. And historically, this has been an indicator of a financial crisis. It didn't happen in 2024. Will it happen in 2025? I'm a little bit out of my depth. Just it will happen sooner than later. And when is the right time to sell everything and hoard cash? Warren Buffett, I think he's got like over $300 billion in cash now. So maybe look at what good long-term value investors are doing and copy them. That's
I really have to research like more about the subject, because I have like many different opinions about that. I mean, still don't have like my own one. I have like good arguments like on both sides. So a lot to learn for sure.
Well, yeah, that's the nature of the game, right? I think it's President Roosevelt who said that he wanted to meet an economist with only one arm, because economists always say, on the one hand you can have this, on the other hand you can have that, and things are always uncertain, and you have people who are predicting a boom and people who are predicting a bust.
Yeah, cool. Thanks a lot. Vincent, I don't know if you have like any other things you'd like to share or to add at the end, so feel free.
Is there anything? I don't know. Is there any point that we haven't really covered? Maybe we should mention a little bit, as we are both in Europe and as I'm focused on climate tech right now, perhaps a few words about climate tech in Europe.
Sure.
I think climate tech in Europe is a great opportunity. Europe has intellectual property more than any other part of the world related to climate tech.
Mm-hmm.
And I'm also quite worried that Europe as a political entity is wasting its time, money, and efforts on things that are just not right, when they could, on the other hand, really create something unique related to climate tech. What I mean is, I see a lot of people, mostly politically motivated, saying, well, we can't be exposed to China for solar panels, for batteries, etc. So we need to create our own. And I think that these are fields where we are not competitive compared with the Chinese. I mean, starting with, we don't have the natural resources necessary to build up those things. The Chinese do. We don't have the government subsidies and the direction and the control of the local market. Our market is fragmented. Not that many people. It's like we have no competitive advantage whatsoever for that. And I think that it may be also an original view, but I really believe that we should give it up. Just accept the fact that, okay, that's what the Chinese are good at, and fine, let's just be customers and focus on other stuff that we can build that the Chinese can't because of our IP. And so that's the opportunity that excites me. That's what I'm trying to do. And I think this may not be the unicorn chasing type of model, but I think that there's a lot of work with a lot of value to be created. Yeah.
Cool. If I would love to start like in climate tech startup or something, or like the domain. I mean, I'm not from the sector. If you can like say some advice to people who would love to start in this domain, what should they do or know?
Well, as always, look for the pain point that you want to address. And the big pain point in climate tech is that a lot of technologies already exist, but they are not being adopted. There's what's called the value of death, where you've developed your technology, you've reached proof of concept, etc., and you never go past the POC because customers don't really want to invest in the infrastructure or the economic case to change from a polluting technology to a green technology is not compelling. So that's currently the pain point. It's so it's a sort of meta pain point. You have to find a solution to make these technologies being adopted by customers, and I think that's a very key starting point. And broadly speaking, I mean, what we focus on these kind of small solutions that enable long duration energy storage, new battery technologies, smart grids, all those things. Spain is a good example. There's a lot of solar power already existing in Spain, and there's potential for much more, but the grid can't handle any more solar power. Right? So we stuck. So let's find a solution to that.
Okay, interesting. I didn't know that. Okay, cool.
Yeah, so find the pain point and look for IP, because within European universities and labs, there is so much top-notch intellectual property that can be used
For that, yes.
Yeah.
Okay, great, nice. I didn't know that, but it's very interesting actually. Okay, great, Vincent. Where can people reach out to you, or how can they reach out to you?
They can reach out to me on LinkedIn. That's the easiest. Or well, it's a little bit hard for me to tell you my email.
Yeah, sure. And I will put that in the description as well. As I said, LinkedIn is a very good option. I will put that in the description. Otherwise, like any other, if you have like a website or something, I will put that also like on the description. Okay, great.
Well,
Vincent, thanks a lot. I really appreciate it. I really learned a lot and a lot of subject that I have to research like after that. So thanks a lot. Really appreciate the time.
thank you very much.
Thank you, man. See you.